Hello, everyone. This is the Obizz podcast series, episode 5. Hope you're enjoying our previous podcasts. As you know, we're trying to share wisdom on a wide range of issues. You can see our podcasts on a number of channels on the YouTube, Telegram, and the social media channels under COVID Kenya. So today we're talking about something quite different. It's on the business front, but it actually touches on each of us individually as well. As you know, we all need to save for the rainy day, and today we're talking about the P word, which I guess some of us try to avoid. It's on the topic of pensions, and retirement is something that each of us have to go through, and it's something that we need to plan early on. We're also thankful to our partners, Radio 44, which is targeted towards the young at age, but young at heart as well. So we hope that this topic is something that you will all learn from, and more importantly, take action. So today it's an honor to introduce our guest. His name is Sundeep Raichura. Welcome, Sundeep.
Thank you, Sneha, for having me.
Yeah, it's a pleasure. I got to know Sundeep actually through the pensions industry when I was on the board and chairing the Teleposta pension scheme, and you were an advisor to us. And also, I think early on we discovered that we have something in common. We went to the same school in the UK,
Indeed.
although in different years. So it's good to see you again, Sundeep, and thank you for sparing the time. So maybe to kick off, Sundeep, why don't you take us through your background? You've gone through a profession which is quite unique. Not many actuaries that we find, especially in this part of the world. And you've obviously developed a key expertise in your field. So yeah, why don't you take us through your journey first?
Sure. Once again, Sneha, thank you for having me. As Sneha said, my name is Sundeep Raichura. I am an actuary by profession and the CEO of the Zamara Group. This is a specialized financial services business offering medical insurance, pensions, and actuarial solutions, and with a presence in 6 countries. I started my actuarial career, Sneha, in the UK. Okay. So I studied in the UK. I worked in a UK consulting firm for 6 years. Mm-hmm. I did a postgraduate in finance, and then came back to Kenya, where I started as an actuarial analyst. Worked my way up to head the actuarial team, became managing director. 7 years ago, I became the CEO of the business. And last month, I marked 25 years with the company.
Wow, congratulations.
It's been a long innings, a good innings, exciting journey, and a lot more to come.
Okay, let's just talk about actuaries first, because I don't think that's a very well-known term. Yep. I know there are some jokes about what is the difference between an accountant and an actuary, but we'll not go there. But yeah, maybe for our listeners, what does an actuary do?
Yeah. So as you said, I'm talking to an accountant, so I shouldn't say that an actuary is someone who finds accounting too interesting. Right?
Right.
But actuaries are problem solvers. We're strategic thinkers who apply our mathematical skill to design solutions to problems that involve future risk and uncertainty. And when you think about it, that's any problem today. So for example, for an insurance company, we as actuaries would advise on how much money does the insurance company need to have to ensure that it can meet its claims, which are based on uncertain future events. Or an individual, has the individual saved enough for their future pension, or what does one need to save for the future? Or a bank, we can help a bank model its credit risk. Or a manufacturer, we can help a manufacturer model the efficiency of its supply chain. Right. So you can find actuaries virtually in every field. But actuaries are the backbone of the financial services industry. And through the work that we do, we impact millions of people across the world.
Right.
Through our role as pension advisors, insurance consultants, and advising financial institutions.
Okay, no, it's a very
so it's a small profession, but
right.
Yeah.
How many actuaries would there be in Kenya?
In Kenya, we have like more than 50 actuaries now. I think we're actually approaching the 60 mark. So when I came to Kenya 25 years ago, we were only 3 actuaries in Kenya.
Wow.
So the number has increased. We are now, after South Africa, Kenya has the largest number of actuaries in Africa.
Okay, so huge opportunity for people who want to get into that field.
Absolutely.
Okay, all right. So let's talk about the pensions industry here. I mean, to what extent do you think, or where are we in this industry? What is lacking, and what would your advice be for people to looking at pensions?
So Snehar, if you look at the pensions industry in Kenya, it's a huge industry. It's 1.3 trillion in assets, right? So and growing very, very fast. But if you look at the number of Kenyans who are actually saving for their future, it's a very sad state of affairs.
And the 1.3 trillion, if I may ask,
yes.
What proportion of that is based on the government scheme, the NSSF, and what proportion will be private?
In fact, the government scheme is only about 250 billion of that, right?
Okay.
So the more than 1 trillion shillings is in private, voluntary, employer-sponsored schemes, right? So these are pension funds that are set up by employers for their employees, right? So it's a big industry, but it's still very small in terms of the number of people it covers. So the vast majority of Kenyans are not covered under a pension scheme, and even those who are covered are not saving enough. So actually, I always say, as Kenyans, we are sleepwalking to disaster without even knowing it. Right? And many people get a huge shock when they get to that age when they feel they want to ease up or cannot work any longer. And what they have is not enough. In fact, I talk to FDs of companies who haven't a clue as to how much they need to have put aside. But let's think about those 15 million plus Kenyans in the informal sector, right, who have absolutely nothing at all, right? So unless we do something about this, we are facing a real crisis in our country.
So that's a very important topic to cover, and we will cover that today. And before we get into that, and people say charity should begin at home. So before we think about and a lot of the listeners here are actually employers, they are job creators.
Yes.
And that's something that we need to think about. But before we go into that, as employers and a lot of listeners running their own businesses, self-employed people, I don't know to what extent they are covering themselves for pensions. So what is it that you think pragmatically they should be doing for planning for pensions?
So look, I think every individual should take out their own pension plan. So those who are self-employed running their own businesses, it's very easy to take out a personal pension plan. Very easy to sign up for one and start contributing. Small amounts of money accumulated over a period of time can accumulate to a very big sum, right? And also there are tax incentives to saving for pensions in Kenya. So contributions up to certain limits are tax deductible. The investment income is tax exempt. And when you ultimately take your benefits, again, there's a very favorable tax regime that applies. So I would say pensions is a very tax efficient way of saving. So whoever one is, right? I mean, whether you're running your own business or you're working for somebody, right? Ideally, if you are an employer, you should think about including pensions as part of your employment package. Now, the thing is, when you say to a young Kenyan that save for the future, you need to put this money aside and you need to put it aside across multiple decades, you're probably going to get a disinterested look, because very many people will say, well, I mean, that's too far away. I don't need to worry about that. And I've got more important needs that I need to take care about now. But I mean, look at it this way, Snehar. I mean, if you're working for 30 years, it's 360 paychecks to finance possibly another 30 years into the future in your retirement. I mean, a lot of Kenyans believe that they won't get there, or life expectancy in Kenya is only 65. But I would say after 35, life expectancy in Kenya is not too different to what it is in the rest of the world. So I'm planning to stay to 100.
Right.
And
you will. Looking at the way
and I'd want
you
to say,
look.
so I'd want to say that Kenyans should take pensions as a very important asset, perhaps second only to their home. And that way we can start changing that culture and thinking.
Right.
But the starting point is start.
And as a rule of thumb, what proportion of your monthly income should you be putting aside for pensions?
Snare, to some extent, this depends on when you start saving.
Right.
So the earlier you start, the lower you need to put aside because of the power of compound interest. Right. So if you're 20 and you start saving and you're looking to say that I want to access this money at 60, you only maybe need to put 10-12% of your earnings. At 30, maybe you need 15-18. At 40, you probably need more than 20. At 50, maybe you need almost 50% of your salary. Right. The earlier you start,
but pensions is a means of saving. So
Yes.
you could be building up your savings pot.
Yes.
Whether it's in cash reserves in the bank, which is earning interest, or property investments or investments in stocks and shares. So what advantage does pensions give compared to the other means of saving?
So look, 100%. Look, when you're looking at your overall saving, you need to look at all that saving, and that includes saving outside of pensions. But pensions is, as I said, a tax-efficient means of savings there, but also it imposes a discipline. Once you are in a pension plan and you're putting X% of your salary every month, it becomes a regular routine, right? And you because you're getting that your salary after the pension contribution has been deducted, it becomes almost like inertia. Right.
Are there risks associated in investing in pensions? If I put my money into a pensions plan, how can I be assured that I will get a certain amount of return?
Look, the pensions in Kenya and indeed worldwide are a very regulated industry, right? So the pension money is invested under proper investment policies through external investment managers. So it's professional investment managers who do this investment for you. They are able to aggregate this money and invest it. So what a pension fund can do in terms of investing is much more than you and I can do as individuals. So you and I can say, okay, we'll buy X number of shares. But a pension fund would buy a much, much bigger number of shares because they're aggregating capital together. Right? So you benefit from economies of scale, you benefit from that expertise, professional investment management. A lot of Kenyans feel, that they are the best managers, but that's not, more often than not, that's not the case, right? So pensions, it's regulated, it's, your money's safe, there's a lot of rules and regulations around this.
Right.
So the safety and security of your money is assured. Okay. And from our experience, people actually make good returns, right? You can actually double your money in less than 10 years, right?
Okay.
And you can keep on doing that. Right?
Okay, that's all sounds like a good deal. So if we talk about the penetration so far, in terms of, you mentioned there's 1.3 trillion of assets invested, but what would you say is the penetration of people taking up pensions, both in, say, the formal sector and the informal and the total population?
So if I take the formal sector of about 2.6 million Kenyans, the number of people covered under pensions is only 1 million.
Okay.
And 500,000 of that is the government pension, right? So there's only about 450,000 Kenyans
in private,
who are in the formal sector who are actually putting money aside,
right,
with their employers.
Okay.
Right. So if you look at the formal sector, only 50%. If you take the informal sector of 15 million Kenyans,
right,
totally uncovered. Right. So if you take people in the Juakali sector, people in the agriculture sector, domestic help, the mama bogas, the border riders, the matatu drivers, touts, zero coverage.
Right. So I think, Sundeep, there's some key messages here.
Yes.
First is for many of our podcasters who are employers in the formal sector. I think that's something they should be thinking about, how to get pensions for their employees. But then also for the informal sector. And I think we've seen the last 6 months with COVID, there's been a lot of goodwill out there, right? There are many people from the communities, from corporates, who have come together and contributed basic necessities like food, even cash into the certain funds that have been set up by the government. But of course, we all know that those kind of measures, they're goodwill, but probably quite short-term, short-lived. But your company Zamara, you've done a certain innovation which is really identifying the needs for the long-term livelihood of the informal sector, and you've come up with the Fahari product. So maybe you can talk to that and tell our listeners how they can get involved in that innovation.
Sure, Sneha. I think it's important just for me to take a step back in here. You talked about COVID-19. And yes, there's been a massive outpouring of support from individuals, corporates, service organizations, right? And that's been very welcome. But as you say, it is very short term and it is not sustainable, right? And so we need to ask the question, why is it that within just a few days of this pandemic, people found it difficult to put food on the table,
right,
and take care of their families? Why is it that people who are such a resilient lot, each time there is a drought in Kenya, there's a flood, they really suffer? One key reason is that they have near zero savings.
Right? Which is reality.
And again, with all the, with this plethora of online, digital lending, credit that people can get, people are heavily borrowed, right? Now, if we cannot take care of these 15 million Kenyans in the few weeks of this pandemic, what is going to happen when these 15 million people permanently drop off the workforce,
right,
when they can no longer work? We are staring an exponentially bigger fiscal and social crisis.
Wow, that's
right?
scary.
And inaction to me is not an option. To say that the government will take care of you is likely to be a dream.
The government is already burdened with their
absolutely, and therefore,
debts,
like we're a young population now, right? When the average age is about 19 years, but there's 10 million people who will be above the age of 60 in the next 15-20 years, right? Can you imagine what the burden on society is going to be if you don't do something about this?
Right.
So Fahari is an innovation to say anybody can open a pension account through the comfort of their mobile phone.
Okay.
In 5 minutes, you can enroll onto a pension plan. You can save, you can contribute whatever amount from wherever, whatever frequency. You can view your statement in terms of how much you have saved with the investment income on a daily basis, very transparently.
Right.
And you have many different options in terms of how you can access that money. Right?
Okay.
So it is so simple, so straightforward, right? And small amounts of money saved over a period of time can actually make a huge difference.
Right. So this is something pragmatically each of us can do to start with our domestic workers or other employers in the employees in the.
So we have an innovation called Gift A Pension.
Right.
And this is where I would say to you, Sneha, if I said to you, there's this 15 million Kenyans who aren't saving, you'd say, well, what am I going to do about that? And even if I could, how am I going to reach them? But if there's that one person who touches your life, could be your domestic help, who looks after your family, your kids, maybe even cooks for your children, right?
Right.
It could be your gardener, your security guard, your driver. It could be the person you go and cut your hair at, or for the ladies, they're people who do that, their hair and their nails.
Right.
It could be anybody. And in 5 minutes, you could spend a few minutes talking to that person about the importance of saving for their future. From the comfort of your home, you can open a pension account for them.
Right.
Now, 5 minutes of your time, Sneha, can change 20 years
and how much
of somebody
does one
else's
need
life.
to contribute on average on a monthly basis?
So look, there's no minimum.
Okay.
You could contribute 20 shillings a day. You could contribute 300 shillings, 200 shillings, whatever the amount.
Okay.
And if you do this gift a pension, you could help your domestic help co-save with you. You could say to your driver, if you put 500 shillings every month from what I pay you,
right,
I will match it for you. right? Now, for you and I, that's the cost of a beer or two, right? Or a meal. And at this time, in COVID-19, we're foregoing a lot of those things anyway, right? So we could change the mindsets of Kenyans and give them dignity in their lives, because that's what people are looking for. And I believe Kenyans are not looking for a handout. Yes, it's very welcome, all the outpouring of support, but you would rather give them that dignity in their life, empower themselves, right? And you and I and all of us, each one of us can do that, and we could actually create a major transformation in Kenya.
And is there a way to set something up so that on a monthly basis it gets automatically deducted, so you don't need to worry about topping up?
Yes, look, there are a number of different payment options that we have. You could use whatever channel that you wish to. Whether it's M-Pesa or the other mobile telco, money transfers, Visa, Master, whichever, right?
Okay.
Yeah. So it's very straightforward, very easy. Okay. Right.
And if somebody wants to sign up, where do they go?
Okay. So they can go to the website www.fahariyangu.co.ke.
What does Fahari mean?
Fahari means empowering you, and it's it's my life, my future. Right?
Great. Okay, well, thank you for sharing that. It's very eye-opening, and I'm sure our listeners will take some action. Just to finish off for today, any last messages you want to give our listeners?
Look, I'd say, pension is, saving for pensions is my personal passion. Right?
We can see your passion.
I think we need to break this cycle of successive generations of Kenyans not saving for their future.
Right.
I would want to see every Kenyan having their own pension pot, putting money aside, accumulating this money, this becoming as important to them as their house in terms of saving, right? And if we succeed in doing this, we will see a surge in long-term stable savings in our country that can be deployed to fueling our economy, creating jobs. And can you imagine, Sneha, the psychological impact of 15 million Kenyans having a pension pot, and through this, a visible stake in the economy? Because these pension schemes will own all the shares and the assets in the country, right? Our next elections will be determined not on the basis of tribal allegiances or the tyranny of numbers or who's going to give the biggest handouts, but on Kenyans voting to say who's going to protect my pension saving the most.
Fantastic.
Right? We will create this change that we much need in this country, and that's my parting message, Sneha.
Thank you so much, Sundeep. It's a very important topic, and we hope people will listen to this and take action and start small, start somewhere, and start saving for pension, not only for themselves, but also for people around them who are touching them. Thank you so much.
Yeah, I'd say it's about safeguarding the future of our society.
Right.
If we don't do this, all of us will lose. If we do it and get it right, all of us will gain.
Great.
Thanks.
Thank you, Sundeep. Thank you.
Appreciate it.